So, hi everyone, welcome to the Finance Story Daily, where we bring you news stories and career insights to enable you make better decisions and ponder on possibilities. So, the VC space in India has witnessed significant growth and evolution over the past few years. And India has, in fact, emerged as one of the key destinations for venture capital investment globally, driven by innovative startups and a large pool of skilled talent. So, to help us understand the behind the scenes of venture capital funds, how do they recruit, what is the career growth opportunities, we have with us Bhavesh Himani, who is the Group CFO of 2070 Health and W Health Ventures, joining us. So Bhavesh has over 15 years of experience in the VC fund space. He joined the space in 2010, long time back, and has a wealth of experience. So Bhavesh, thanks a ton for joining us and for helping us understand, the opportunities the space provides, and of course your journey. So thanks a ton again.
Thanks, Chantal. Thanks for having me.
Thank
And yeah,
you.
I'm quite excited to be part of your interesting storylines, and yeah, happy to share more.
Thank you, Bhavesh. And everybody who's joining in, thank you so much for joining in. We actually had to postpone this by 30 minutes because it's a mistake from my end. So thanks a lot again. If you have any questions, do type in. Bhavesh will take it. Bhavesh, my first question to you is like, what inspired you to start a career in this space? Was it your career goal? As soon as you qualified that, what, I want to get into the VC space, though it was very nascent in India. So can you take us back through your journey?
Sure. So, Chantal, when I really started off, after completing my CA, I was with one of the big fours for a few years, and was lucky to really, see a lot of different kind of businesses as an auditor. So there were a lot of these big manufacturing firms, a lot of these services businesses that I was seeing as an auditor. I realized you can do a lot more by being on the other side, working with them. PVC world was actually coming to India around that time. Very interesting times. Markets were really, I think, very inviting for a lot of funds that wanted to come in. And this is way back in 2006 when I joined the first PE fund. So really, the motivation was to be more closer with these businesses, see how the investment industry works. I always wanted to be in the financial services space. So the options were really, traditional banks and, do that bit, or try and explore something which was almost like coming up in India at that point of time. So was quite lucky to get an opportunity to work with one of the leading PE funds at that point of time in India. It's a UK-based PE fund called Actis.
Yep.
And they were, it was a global fund making investments into India and really, in other parts of the world. So that was really, a great opportunity to get a bird's eye view from a distance, right? It was a much smaller role, I would say, more on the fund operation side, but the organization was so huge that if you keep your eyes and ears open, you could really learn a lot. And that was really the motivation to be in one of the mainstream PE funds, learn about how these funds operate, see these businesses being built, grown really, and exited from investors' perspective. And so that's what triggered this switch from traditional accounting auditing side after first around 3 years post qualification with Deloitte to Actis. And as I said, that gave me a ringside view, good view on what's happening in that space. But then really, again, I wanted to go deeper, and so the opportunity came along to work with a leading impact fund, Low Capital, sometime in 2010. And that was really like the turning point, right? Got to see end to end how these funds are raised, how investor relationships work, how the operations work, tax related structures for the funds, exits, and really the whole gamut, right? Was involved in the second fund from end to end, third fund, which was a much bigger fund again, was raising, supporting, of course, the managing partners and working alongside them on raising and, working with the investors and all. So that was a very interesting, long 8 years kind of an opportunity experience to see, how this space is evolving. for me as a professional, but also really saw all these businesses, scale up beautifully well. All the I would say, more than the capital, it's the capabilities, it's the beyond capital, values that you're able to bring to the table as an investor, right? Which is what I got to see very closely, at my stint with low capital. And then, yeah, of course, there was an education fund, very small fund, but very impactful. These are again, impact fund and then education fund. uh, they leave an impression on you. You really, imbibe few of those qualities, because they're clearly solving a lot of real problems that a country, evolving and developing country like India, is really facing. So short stint with education fund, again, was very insightful. New education policy, came around that time, so could understand why of many things. And then really W Health Ventures, which is a healthcare fund. So all along, really, these were impact funds, and the motivation was to go deeper into whatever I was doing, whether it was with the investee companies or really at the fund level, at the investor side, regulatory side. So that's how the journey has panned out very interestingly, with a lot of horizontal growth, because the teams are very lean in all these, setups. So it's more of horizontal growth than really, vertical. There are only as many levels higher up in your function, but there's a lot more deeper and a lot more value that you bring over a period of time. So that's how it has panned out for me. Uh, yeah, I'll pause here, and I'll let you probably just chip in,
Yeah.
add, ask any question further. Yeah, I can go deeper.
Cool. That's great. Bhavesh, I know you highlighted a few aspects in your journey, right? But if you have to go in a little deeper, like how was your role at Deloitte? And then when you moved to Actis, which was you were a fund administrator, right?
Right.
From in that team, right? So that was a P fund, a UK fund, where I guess a lot of the back end operations for right for the fund is done in India. Okay, then you
Correct.
move to a VC fund, which is focused on impact investing, and I think from there the VC journey has begun. Okay, so can
Correct.
you take us through a little bit about Deloitte, because we know assurance, how does it work? But if you could highlight a little bit, and then how did you transition into your new role at Actis? What was the learning? Was there an overlap of knowledge that you already had, or it was like learning
Yeah.
from the start? So yeah, that's
Sure. Sure. See, as you rightly said, I mean, Deloitte and assurance is a lot about a lot of numbers, and
yeah,
a lot about really, putting the knowledge that you gain during the audit process into the right perspective, right? Because everything's not in black and white. It doesn't work like that. So it was more around, making numbers say the right story, and that's how I actually look at the assurance kind of roles. So when I moved to really Actis, yes, it was a funds administration, fund management, fund operations kind of role, where it was more around, again, putting those numbers in the right perspective to tell the story of the investment that was made, right? And that's the way I summarize it. It went to really the stakeholders in the form of the investors, who would want to, of course, understand what's happening in these investments that have been made. It would go to the regulators, because they would, of course, also want to see the performance and whether we are really on the right side. It would go to prospective investors, right? As in when we really raised the investors. So there were different stakeholders for everything that was summarized. So that's one side, but the overlap was clearly because of the numbers, right? At the heart of all of this was the numbers that one had to put in the right perspective. So there was some bit of auditing from the other side, to make sure that the regulators were also aligned and we were doing really in the right manner. But it was largely, switching from being a professional, just reviewing what has already happened, than to the other side, where you were really part of the ongoing journey on a day-to-day basis, right? And then really end result were these reports. So there was a lot of overlap, because the numbers really, is the core of, I think, both these different roles at Actis and Deloitte. But Lok was then very different, right? Lok had all these, of course, numbers, but yes, it was a lot more closer interactions with many of those startups, right? So we did help many of these startups that were actually very small, set up many of the functions for them. For me, more of finance side, their fundamental or the core pillar of how the controls and everything would work was something that I got an opportunity to work with few very interesting founders, right, who were industry veterans from their point of view and where they came from, but to help them on areas where they needed, I think, more hand holding. I think that was an interesting opportunity to really work on. So again, numbers, but a lot of controls, foresee really what was coming, as they were going to scale, and get them, keep them prepared, right, for the business to scale. And all of these companies did raise follow-on rounds, so keep them really, diligence ready. Were the other aspects. And from fund perspective, I would say working really on the transactions, right? Whether it's investment, whether it was the exits, the right structures played a very important role. The structure that you come up with while you're making an investment has a bearing on what kind of exit you could actually carve out for yourself. So those things, I would say, the foundation still was understanding of the numbers, regulations, but implementing it in a very different manner to come up with something which is, which has a longer life, in the sense that when you're investing for a 5, 6, 7 year period, you need to keep that kind of period in mind when you're really going into the company, both from their operations perspective and from really the structure that would help really facilitate a challenge free or less number of hurdles when you're really looking to exit. So that's how Low panned out, working closely with the companies, working with investors, structures, and yeah, that's broadly how I actually would say that's what went into it. So again, then CBA Capital was somehow similar, a different sector, but a much smaller fund. So even closer engagement with the founders, right? I think there it was almost day to day interactions with the founders. Much smaller businesses, so really needed more hand holding. Uh, I think I was lucky enough to really even be part of those two investments. I mean, I could actually say there were two investments that I actually made from the education fund, and got an exit for one of them, a very stellar kind of an exit. It was an acquisition by
Amazing.
by a I would say a big IT company. So it was an interesting end to end kind of a journey of investing and then getting a meaningful exit in a very short span of time. So role evolved, but everything was around understanding the business, understanding the numbers, and having the right construct for investment and really for the company's finance and operations and controls and everything which comes together when you are building a business. So yeah, that's how it has been. 2070 Health is actually mix of everything. I would say it's a VC fund plus a lot of capabilities. Right, what 2070 Health does really is look for the ideas that are investable, and white spaces that have not been capitalized or invested in right now. We have our own in-house research team which does really that research and comes up with those ideas. We look for external founders to back them, to have them really come along and run those businesses alongside us. We bring in a lot of, we bring in a pre-seed check, but we bring in a lot of capabilities, right? One of the capabilities is finance and legal, which I head here at 2070 Health. We also help them with their tech. We also help them with their strategies. So it's a lot more deeper engagement, and capital is probably one small aspect of what we do at 2070 Health. So this is more of investing and really running the businesses for a few of the functions where we would not want the founder really to focus on initially, right? We let them really scale the business, and that's how it has panned out. So it's a 360 degree from investing to working with startups and now really building startups by running few functions for them for first couple of years.
Amazing. That's great. So, Bhavish, why did you move from, say, the PE sector to the VC fund sector? Because we see a lot of fund administrators, say Apex Fund, and everyone during the pandemic, it like blew up in India. The hiring was like there was a lot of hiring happening, right? So, what did you see in the VC space that you transitioned over there? Why not continue in the PE space? So, there are a lot of people in this space who would like to know.
Yeah, so see, I think both have their own space. I would say in the journey of any, I think, growing business. VC space I see is a lot more closer to the businesses. At that stage, they need all and more help. So you're practically working alongside all those investees that you invest into. So it's a lot more deeper engagement, which as a professional, I find more satisfying, where you have a much better insight. You're able to add value on a day-to-day basis in addition to the capital, and you're coming in at a stage where the foundation has just been laid, right, or being laid in many cases. So that's a lot more, I would say, exciting for someone like me who likes to try and see and feel and experiment with things. So this is uh, where I think I can actually add a lot of value, but at the same time I get to learn really almost on a daily basis something new, right? Because all these, there's so much innovation happening, right? And VC space is probably fortunate. VC funds are fortunate to probably see that, and experience these innovations much before many of the PE funds could actually do that. So in India today, I would say if you're looking for something very exciting, fast growing, and to propel, I would say, your professional journey, VC funds is a must have to start with. Than to straight away really jump onto the PE funds, where you need more deeper sector expertise to be able to add value. Stakes are much higher,
Yep.
and it's a slightly different game. But I think VC is where a lot of action and learning really for all the finance professionals at this stage would be, in my mind.
Amazing. I'll ask you this question. It might be a little naive, okay? But I guess, like me, a lot of people would also not know, okay? So, when you talk about the PE space, right, we see a lot of fund accounting, fund administrators. We see a lot of US, UK based funds, and, they need experience in fund structuring in Cayman Islands and, stuff like that. Right, and we see a lot of hirings happening in the big four where they send them to the US and to different places. Okay, so that is one PE aspect in India, which is a fund administrating aspect, right? Other PE funds, okay, I assume maybe Kedara is like an Indian PE fund where they invest in India. So can you
Right.
differentiate between the PE that we see like Apex hiring for and the other actual PE funds who work for the Indian market and not just do the back office operations. That's one. Okay. And can you take us through the growth of the PE in the private equity fund in India? Because we see a lot of hiring happening. Like I see a lot of posts by recruiters at Michael Page. We're hiring for private equity, somebody in the private equity team, and also for in the VC space. So
Right.
can you compare the growth in both spaces and how is it shaping up? Yeah.
So see, I think it's a function of it's a demand and supply, really. I would say, right. So fundamentally, what does really PE or VC does? If there is a demand in any sector, right,
Yeah.
you will have people really trying to solve those problems and meet those demands, right? And to meet those demands, you really need all possible resources, including capital and other capabilities. And that's
Yeah.
where really I think PEVC's fund
Yeah.
come into picture. On day one, really none of these companies can raise capital from the listed market and all. And so therefore, PEVC funds really solve for the capital. And of course, there's a lot more than just capital. So that's why these two are important. Now, both
Yeah.
of these P and VC funds really have a different role, right? At different points of journey of a venture. VC comes in a lot more earlier, where the product market fit may or may not be there. Where the team might be. I think you might just have just the core team members. You're still scaling up. You might be figuring out what channel works better for you
Yeah.
versus P, right? P funds would come in slightly later, more series B, C, D onwards, which is when the company's product market fit, strategy, and everything is largely in place, and now you're trying to scale, diversify, and take these opportunities to different parts where you could probably again implement the learnings that you might have really might have actually
Yeah.
added in. Now the opportunities in I think both these kind of setups are there for sure, right? As I said, they both have their own place in Indian, I think PVC landscape, and I would say fundamentally both would have same requirements at a very high level for someone in the finance really kind of a role, right? It's the understanding of the regulatory landscape. It is the understanding of the numbers. It is the understanding of few of the diligences that actually are almost must have at different stages of investments. Uh, Investor relationship is another aspect, right? But in PE funds, you would find more focused, more larger teams, specialized teams doing these kind of roles. So uh, you go a lot more deeper, but there is less of horizontal, I would say, for them there, versus in a VC kind of a setup. It's deep as well as horizontal. So it's like if I were to compare an HUL versus, let's say, early stage company, right? Things are more sorted there. You focus on different problems to be solved for. Whereas in a startup, uh, you try and do as much as you can, more than what you might have fundamentally or basically. If you sign up for finance, it doesn't really mean that you just only do finance. You're probably working alongside the operations team. You're working with even the sales team. So it's a lot more horizontal than really just pure play deeper. So the roles are very much I would say at a high level similar,
Yeah.
but you move a lot more faster in VC space. And of course, you learn a lot from the mistakes that you made because you move fast. You're bound to make mistakes. Whereas in PE space, like it's a lot more sorted, as I said, right? So you have a different problem because the ticket size is very high. Risk management has to be of a different level altogether. Companies have already really grown. There are there is history. There is all that has happened in the past, which can actually also have a bearing on how your investment will perform. Uh, so fundamentally, it's deeper, going into the role in P spaces, PEP kind of funds, and in VC really more horizontal, where you don multiple hats at the same point of time to make things move faster. And I think so. That's the way I see really the differences between roles in these P versus VC funds. Yeah, I'll pause here again. I don't
Yeah.
know whether you answered the way you were expecting, but yeah, I'll pause here. Happy to.
No, no, absolutely. So, Bhavesh, my question is also how, if you would want to take it up, I know because you are more on the VC space, like, would you want to take up how has the PE space also evolved? Like, why do we see so much of PEP today, which we didn't see earlier? Like, so much of private equity investments, so much of hiring happening in this space. Any specific reason, maybe under 1 minute, if you could just tell us about that.
Yes. So see, I think again, India is growing, right? So you'll see a lot of capital coming to India now. There are companies that have started a decade ago, who are more suitable for PE funds to really invest into, and then there is a lot of innovation and a lot of startups. So VC funds, of course, are also really are very much in demand. In fact, if you would see, many of the PE funds have started their own VC side pools or funds separately, right? Because the demand and the opportunities is I think for both of them.
Yeah.
Uh, and so therefore the hiring, right? Because there is a lot of action in India in terms of investments.
Yeah.
You need really people to run with those roles, functions that are really fundamental to the business, and so it's only going to grow, right? As the Indian market grows, there are only handful of markets where investors want to invest today. India is definitely one of them, and almost at the top of the list. And therefore, the capital is going to come in. Capital is going to come in. You will need people to really manage, run, and take care of everything that comes with the investments that come along. So uh, that's what's happening. It's the India story, which is resulting into many roles here.
Yeah.
Because even the international funds are now setting up their India focused funds based out of India, whether it's in the mainland or in GIFT City as well. So you'll see more and more really opportunities coming here, given that capital is going to come. GIFT City is also going to make it possible for many of those managers to be based out of India, as against predominantly. I mean, in past they've been setting up shop more in Singapore, Mauritius kind of jurisdiction. So all
Yeah.
these things put together, I think it is bound to happen, and therefore it is happening. And then therefore there are roles which require then the right professionals with the right pedigree, skill set, to be really to be hired by these funds.
Amazing. So yes, so I kind of understood right now because India is on an upward growth trend. The funding of VC started long time back. A lot of SMEs are growing. So that's when the private equity market sees benefit. They have a lot of investments coming in, and that's how. So it's basically a parallel growth that's happening. It's
Exactly, exactly. Yeah.
Okay. Okay. So Bhavish, if you want to take this up, okay, what are the regulatory changes, that has happened in the last few years that has propelled, the growth in the PE ecosystem, the VC ecosystem in India? Okay, and that's one. Also, if you want to take it up, also the next one is about Gift City. We hear so much about Gift City, but if you could summarize what exactly is the benefit of Gift City and how is it creating a larger impact to the ecosystem?
Sure. See, regulatory changes. The biggest positive change in last, I would say, 7 8 years has been introduction of AI regulations, and the which has really made onshoring of all of these many of these funds
Yeah.
possible.
Yeah.
So clearly, the AI regulations has allowed both international and domestic investors to pool capital in India,
Okay.
which has made many of those information sharing very transparent, which makes really both the regulators and I would say investors and fund managers feel a lot more comfortable around what to expect from the regulators, right? With the base being shifted to India, the tax authorities have better visibility. SEBI is a wonderful regulator which has always heard out the request from the VC PE funds, and so it has evolved beautifully well for all the capital being pooled in India, right? So that's one. I would say the tax laws to back an AIF, making it to pass through kind of a vehicle, again is such a welcome, really change that has promoted again pooling of capital into India. Managers have moved into India from many other jurisdictions because things are much better, much more. I would say transparent. You have more less uncertainties, right? And so that's one area that I would say has really helped in last 7 8 years, bringing really everyone in India, which just helps. I think then therefore the other service providers or partners in the periphery to also grow along with the funds, right? Because then therefore you would really look for people in India to really make this really work. Now, Gift City is again, I guess, a very I would still say it's in nascent stages. It has made a lot of long strides in last 4 5 years, and many of the bigger funds are now setting up their funds in Gift City because it comes with some very meaningful, I would say, advantages. Single window for all the approvals, a lot of tax benefits, and both direct and indirect taxes has actually again given it that much needed push. Right, it's really the offshore, I would say, jurisdiction for India in India. So that's again going to be really, drive the much needed again foreign capital coming in and treated as foreign capital, but a designated jurisdiction or part of the country from where you could actually operate and run these funds is going to help both, right? The investors' confidence to really be able to say that, well, it's not in India, it is through India in India, and of course the regulators again get a better insight. So these two AIFs and Gift City, of course, has made Indian market and Indian fund space a lot more attractive for everyone involved, and I think it's just going to help us in next decade or so to probably become one of the leaders for not only funds that are investing in India, but now with Gift City for funds from India investing outside and globally. Is going to be, I think, the next phase of growth that we see through Gift City in probably coming few years.
That's amazing. You explained this so well. I just have a follow-up question, okay, Bhavesh? So when you talk about funds earlier, so you've been in the space since 2010. So earlier, when there would be a VC fund was set up, right? So what is the connection between say setting it up outside India and right now? Is it going to be set up in Gift City? Like how was it previously, and how do you see it changing? I know it's a very basic question, but
No,
how does it work?
yeah.
So I'll just add this. So whenever you talk to any, say you talk to a recruiter, right, or you talk to somebody in a CFO like yourself, they'll say, you know what, I have experience in structuring a VC fund in this country, and that's how I do it. So why is it via some other country? Why is it not directly?
So see, I think this is going to be an evolving thing, right? Today, I would say India has created an edge for itself over many other jurisdictions, right? What gives you an edge? Transparency in terms of regulations, political stability, right, and laws that are of such quality that you have been, of course, seeing across the globe, which gives you a lot of confidence, right? So many of these jurisdictions where people used to go earlier was largely because of the the uh, the comfort that people would draw from those jurisdictions, regulators, from the quality professionals who were really supporting these businesses, and of course the capital convertibility, right? I think the FX bit is again an important aspect to factor in, but largely I would say the clarity around the regulations, the tax treaties, and the availability of service providers, quality service providers, is what is going to drive where a manager would want to really
Yeah.
set up the fund. From investor perspective, it would again be few of these things, but also really ease of investing through it. Many jurisdictions, investors from many jurisdictions were for a very long time were very comfortable coming through a feeder vehicle, who have now, I think, been a lot more open to come, directly into the India. So this is evolving given the initiatives, given these changes at the regulatory level, but also really, the professionals, the quality of professionals that were needed to really have these, funds really be set up in India. So So that's how this is playing out. As I said, it's a constantly evolving kind of a space and situation, and currently we have an edge, and we have to keep working on it to really invite the capital, and of course not to forget all these businesses that are doing really wonderful innovation and growth, that of course invites all these other investors to come in. And then when you're investing into India, you would first definitely want to see whether you can do it from India to keep it keep it more efficient. But yeah, I think these are the few aspects that I hear and I have seen really, which are kept in mind when you are talking about why not US or any developed geography, and why come into these I mean come directly into India from how it used to be probably a decade ago.
Okay, so it's basically regulatory and talent, and now that we both are getting adjusted in India, so it's taking a different dimension. So to sum it up, it could be that.
That's right. Yeah.
And I know the questions I'm asking you actually need a separate conversation because they are not. But I'm just trying to get it at a superficial level a little bit. Bhavesh, you also spoke about. You said you've been a part of a VC fund, for the entire journey, right? So, what is a VC fund's journey? After taking this question, I will then go into the career aspect of it. But what is this fund journey?
So yeah, I mean, it starts from you know a fund, a group of people coming together and identifying really either a sector focused problem to solve for. There are sector focused fund, there are sector agnostic funds. So first you really come up with your own strategy around where to invest, and that really stems from the problems that you see in any particular sector that can be solved through businesses, and of course non-business initiatives. So the first is really the strategy, with the vision really of how you want to play the game. Really, I think, and then thereafter, it's getting the like-minded investors back your thesis, the strategy, which is the fundraising, really kind of a step where a lot goes into the structure, how you're setting it up, what kind of partners would be involved in the overall journey of the PEVC funds, which would have a lot of tax, legal, finance, investment professionals, and so it's the team at that stage. Once you have clarity of the sector, and you have like-minded investors backing you, uh, once that is in place, I would say it's about building a pipeline of the businesses that you would want to back that are aligned with your fund strategies, strategies that you have presented, and basis which the investors have backed you. So
Yeah.
it's building those pipelines. Uh, and then I think it's a lot of diligence that goes into these decisions that are made to back any particular business idea, or if it's a late stage, then these businesses that have already been around. So a detailed understanding of the business side of the of the idea that you're looking to back, legal, financial, but the most important aspect that I see is the people side of it, right? It's the right founder, right key members, right team that builds the business. So really, that alignment is really at the top. Once you made the investment, it's then more like managing the portfolio, but working very closely with these companies, right? So one side is managing portfolio, which is where you uh, try and identify risks that you see, summarize the performance, help them track what they had actually presented when the fund was looking to invest in terms of business plan and all, and helping them really achieve that growth trajectory, which is really a win-win for both the fund and the company, right, that you're backing. So that's the growth stage after the investment is made. portfolio management side of it, where you keep tracking all these I would say key matrices important for the company's growth, and of course for the investors' comfort, understanding of where they stand. And well, yeah, I think at a certain point of time, you look for really, the right kind of an exit for the investor. Where again, I think it's important, and at least in my journey, I've seen that, well, as an investor, as an earlier investor, getting the right investor to come in when you're exiting is equally important, so that the company's growth continues. And so getting the right aligned investor who's probably taking over from you when you're exiting, if it's not a IPO kind of a scenario, if it's a secondary kind of a transaction or a strategic transaction, is absolutely, I think, important for that company to grow, right? Even as an investor, once you've exited, you would want those companies to only scale further and not start degrowing. So that's on the investment side. Of course, once you've made all those exits, it's about making sure that the investors get the returns in a timely fashion, in an efficient manner, with the right tax structures in place, so that they're paying what is their due, but well, it is done in an efficient possible way, so that well, they also get the right returns in the timely manner to get a healthy IRR, which is what every investor would look forward to. And then yes, once the purpose is achieved, you either raise the next fund, and which happens almost like simultaneously. I would say at the end of the investment period of a fund, every fund would have almost like a 10-year fund life, 5 year for investing and 5 year really for portfolio management and exit. So at the end of the fifth year, you've deployed most of the capital, so you would probably start raising the next fund. So those things keep moving in parallel. So that's the way this journey really works for any VC, and I would say even for a PE fund.
That's amazing. Bhavesh, we covered the key responsibilities, yes. What are the challenges in your role, as a CFO or being a part of the finance team? And you mentioned about career growth. When you said career growth, you said the growth is mostly horizontal because the teams are smaller, right? So if you would want to take up these two pointers.
So, I mean, responsibilities, challenges, is what keeps this role exciting. So, if I could really, break this role down, there is some very must-do core kind of role, right? Where it involves all the number crunching, all the reporting, and all, right? So that's almost like given, and there the challenges are more around, doing this accurately and in a timely manner, because what you're really trying to put together is dependent on what quality of numbers you get from your investees. It's really summarizing how the investees are doing. So
Yeah.
challenge is more to have these investees have their systems really set up well, so that the information that's coming is accurate and timely, so that when you're reporting in term to your investors or regulator, it is accurate and timely again. So that's one side, I would say, is fairly straightforward. Challenges come really from the different kind of businesses that you back. Each business that you're looking to back would have its own challenges, right? Both from structural, regulatory implication, newness of what they're trying to do, because you would want to back all the innovation. Innovation really comes by pushing the boundaries, and therefore trying to solve for the unsolved or unattended to kind of really scenarios, which comes with a lot of gray areas, which you try and solve for along with the founder. So those are the challenges where the regulatory landscape may not be black and white for some of the ideas that you're backing, right? So solving for those, and still keeping everyone outside of prison cages is really, I would say, one of the important challenge to really deal with on a day-to-day basis. uh, right, so that's largely how I put it, right? There is, for a fund, depending on where your investors are, there's a foreign exchange fluctuation kind of a risk. The currency, Indian currency, has been depreciating, which means depreciation in currency itself eats up a lot of returns that the investors should actually get. Even though the even at India level, you might have done really fairly well. Your investment might have done fairly well, but because of the currency depreciation, a lot of gets eaten up. So many of those strategies, hedging, and a lot of covers and all those things could really make the returns meaningful in investors' currency as well, right? So there are different aspects, but I would say the most challenging one is really to navigate these businesses through the uncertain or unknown regulatory landscape which exists for any innovation.
Yep.
uh, and that's where really the value add is, in addition to, of course, making sure that your day to day core is top notch quality, because at every stage when a manager goes to raise capital, they get diligence as well, right? It's not that the fund is investing and diligencing, but well, the fund itself gets diligence over its life several times. So making sure that your house is in order and in top notch qualities, I think the other side. Now, the growth
Yep.
opportunity really, stems and comes from these roles and challenges that are part of the finance function in any of these funds, right? Growth is, of course, when you start off, you would probably looking at one aspect of the business,
Yep.
which is more inward looking, making sure that your house is in order, your books are really, done properly. There are proper controls, keeping the size of the business in mind. There are zero red flags, zero non-compliances, because the stakes become very high, right? When you have these cross-border transactions happening, investors from different parts of jurisdictions, making sure that what you're doing is also in line with what their regulatory
Yep.
requirements are, right? So compliance with the shareholders' agreements terms that summarizes what the investor really wants is one aspect where I would say every professional in this space would start from, given that that's the fundamental and that's like the holy grail of what the investors would expect. And you grow really, and then you work more on then the transaction execution side, more on the structures as you move along. Once you understand how the funds and the deals really uh, are executed, I think you evolve by working more closely with the founders of the companies, helping them with the fundraise, helping them with the with the structures, with the right kind of rights for the investors, and right protection for the founders, right, in terms of their rights. As they raise more capital, they get diluted, which means they need to ensure they have the right amount of flexibility to run the show. So the opportunities are, I would say, the growth opportunities are unlimited, effectively, right? As a finance professional, you can go onto the business side and help the businesses, grow. On the fund side, there is a lot more that you can do with the numbers, with making sure that your investor reporting compliances, shareholders agreement is a very detailed document, equivalent to memorandum of association and articles, fundamental documents of any company, right? So making sure that you're completely compliant, which makes your fundraising ability much better, right? Because you've delivered on everything that you signed up for. These are two different ends, but between these two, there's a lot more and almost unlimited opportunities for one to really do in this kind of role.
That's amazing. So, Bhavesh, have you ever considered becoming joining a startup and, maybe the startup, being a startup CFO? Has it ever crossed your mind, or starting your own? Because you're meeting startups every day. There's so much of funding, there's so much of money coming in. Has that ever crossed your mind?
So see, 2070 Health is really, that it's a cross section of being a startup and investing in a startup. So, in this role, it's like working with the startups, managing, their functions independent of this startup really, if I could say, right, for a foreseeable future. So in last 1.5 years, we've backed and incubated, if I could say, around 5 businesses. And for all those 5 businesses, really, my team is running, few of the functions where we are setting up the foundation for them, right? And laying it down in such a manner that, well, there is less and less time now and going forward of the core team
Yeah.
to go into this. So in a way, it is like a startup, but well, yes, with a second hat of an investor as well. So there is a blurred line, and that's the conflict, and that's the challenging part, that you have to really decide which hat you are really wearing when
Yeah.
you're working on a particular decision making. So that's, yeah, clearly been. And the other question you said, do I ever think of starting a startup? Well, almost every single day, right? When you're talking to these
Yeah.
entrepreneurs, hearing their story, the energy, the innovation, the kind of I think solutions that they're trying to bring to the table. Well, it's very difficult to stay away from it. But luckily, 2070 Health gives me that opportunity to really work very closely with my skill set, probably adding value, but at the same time learning really, on the business side on every single day with more than one business.
Amazing. Bhavesh, this is a little bit of a personal question, but how do you interact with dreamers? So most of these startups, for instance, their ideas are out of the box. They think big, but you can't really see traction initially. It takes a long time, right? So how is your mindset wired to, or how do you foresee that? Okay, this can transpire. What do you look at? And also, what are your learnings of working with startup founders, who really are really bold? Okay, they're really bold and they drive change, though it takes a while, but they do. So if you could share a little bit from your experience.
Yeah, no, see, at the core of it, it is you know if one can relate to the problem that they're trying to solve for, right? The business opportunity comes from a solution. So first, there should be a problem that exists, right? As an investor, the key aspect to validate is, well, whether we see that problem in the same manner as the founder really is looking at, right? Whether you see enough demand, enough opportunities to scale that business, so that in addition to solving that problem, you're able to really generate enough returns as well. So that's the fundamental, side of it. Founders have wonderful, beautiful ideas, but putting that in the perspective, in line with our vision of course, creating an impact, solving for a healthcare problem, but of course also generating meaningful returns, are the two different manners in which we look at it. Uh, where it helps again, because we would also, of course, keep the risk management, making sure that the capital doesn't go down. We're backing the right businesses, and it just doesn't really it's not a write-off.
Yeah.
Requires you to again then look at it very differently, and that's where the conversations with the founders help, and that's what we are actually able to add to the initial conversations, where the founder might have a wonderful idea, right? But when we talk about the execution, when we talk about possible returns that can be generated out of that idea, it puts it in the right perspective for founder as well, right? Because the founder would also, they're putting a lot of their blood sweat behind it, and therefore they would also expect some meaningful returns. And therefore, when we bring in that financial discipline and return perspective, it becomes a story which it becomes a lot more meaningful for the founder as well. So that aspect of what we bring to the table is, I think, I think very, very helpful even for the founders. I think, where we are able to make them see the other aspects, the risk side of it, because a lot of it is execution, but a lot of it is risk management as well, both for founders and for the investors, right? So that's how I think it comes together, and yeah, that's how we look at it.
Amazing. What makes if you have to compare a successful founder, okay, who has raised money and a founder who hasn't made it, and both have raised money, what is the distinction between them? What makes one successful? The timing is right, everything is there, the team, but one makes it, one does it.
Well, yeah, I think see, it's as I heard somewhere recently, it's not really the best product or service which gets to which manages to raise capital. It's a lot about how you put it across, how your team really is also able to seems to be aligned and really is working towards it. So the differentiator is really also about how you're able to put it across, right? At times, a wonderful idea, a wonderful solution may not get back because it was not really put forth in the right manner, which can be unfortunate, but that is the way many of these ideas, and therefore our role becomes very, I think, important to be able to ask the right questions, right? To be able to at times understand and go deeper and make really even the team that's talking about that idea, uh, be able to express and put it across in the right fashion. But well, the way you're able to put it across plays an important role. Everything else, I would say, if everything else is the same, but rarely, honestly, everything else is the same. The journey of the founder, a failed founder, honestly, is a very valuable asset, right? The experience of having seen something go down that you've tried to build for years is invaluable, I would say, right? So you'll always find something more than just the idea, the team that differentiates. But yes, clearly also the ability to really put it across in a manner which excites and lets even the investors see value in it is also extremely important.
Amazing. I have this last question for you. You've so kindly answered all our questions. What advice would you give finance folks who are interested in working in this space? That's one. Secondly, what if they want to be a part of the finance team and then they want to move to the investment team? Okay, so do you see that happening? And why is it not very common that finance people are not particularly hired or internally moved to the investment team? So,
Yeah, no, so that's this aspiration is very common, and I'm not I've seen this many a times, and see, there are two reasons. One, because this role is very fundamental, right? It may not be it may not, it's a long term play as a finance professional in such businesses, right? But once you spend enough and necessary amount of time, it becomes uh, very important for even the organizations to ensure continuity of that professional running that role. So one is the organizations need to have that person really continue that role for the organization and fund's own interest is one of the reasons why you would see not many really being able to really work or switch to the investment side of it. The other is, of course, the skill set needed, and also ability to demonstrate the switch that is needed, right? It's not very common for a finance professional to demonstrate that switch, right? Because once you're in this role and you've spent enough number of years, the switch will happen as an addition to your role and not really as you probably passing it on to someone. So ability to switch is definitely possible, to do that, but you need to keep acquiring necessary skills to probably switch to the other side. But more importantly, I mean, I see this being a role where as I've been told in many of the funds that it's not easy to replace a finance professional, a CFO of a fund, but many other roles are a lot more easy to replace, right? So that's the other reason why you would see once you get into the group, once you spend enough time, there's a lot more to do, and becoming part of the investment team in some shape and form,
Yeah.
anyways, happens over a period of time. So I would say one should look at adding more to the role than to really go switching, because it's a long term play any which ways, and in long term it's good to have more coming your way than really you trying to switch, because then you're starting from again from zero, right? As against something that you build, plus you're adding more, and everyone's more than happy. Really, all the organizations have, at least I've worked with, have been very supportive for me to do more and more, right, on the investment side as well, and the role grows, and that's the way I would actually say that one should look at.
Amazing. So Bhavesh, what is the closing message to, CAs or finance guys who want to join the VC space and they want to understand, like, is it the right thing to do? Can I really grow in my career, or I have to just be in this space? And what are the opportunities? Your closing remarks.
No, so see, I think one should be, in love with numbers. One should be very keen to understand the, ever changing regulatory landscape, not only for, for the country where they're based, but internationally try and understand how things are shaping up, because they have a bearing on everything that they do. But persistence, clarity that it's not a 2 year, 3 year kind of a role where you'll get to see end to end, and therefore expand your role is at the core, right? If you want to get into this, I would say nothing less than 10 year period is what is needed. And yeah, that's these are the few key things I would say one should keep in mind, when you're really looking at this kind of role.
Okay, cool. Done. And Bhavesh, I'll just ask you this question. If you were 22 or 23 today, how would you plan your career as a finance person? Where do you see the opportunities?
No, I would see. I would continue definitely be in this space. This is, as I said, the most exciting space where you are in the financial services. You're seeing all these, businesses grow in front of you. So you really, your fingers are in more than one pie, at all points of time. You have you can grow as fast as you like along with these businesses. There is always an opportunity really to work more closely, or even work for many of these startups as you move along. So to start from here would again be what I would want to do even at 22, 23. And it's just that in 22, 20, when you're at 22, 23, you have to at least invest 4, 5 years before you could actually even think of doing more than your core role. So that's the way. But well, this is the space where I would say you get to see both sides: financial services, operating businesses, and challenges every day, which is I think what one should look at that age and stage of their professional life.
Amazing. Thank you. I mean, you've answered every question, and thanks a lot. I've really asked you too many questions, I guess. So, Bhavesh, thank you so much for your time, and we'll see you around. Thank you so much.
Thank you, Chantal. Thanks for having me. It was a wonderful conversation to have, and yeah, in the process, of course, I also rehashed few of the things that you made me really think about way back, when I started. So yeah, thanks to making me revisit few of those, I think, wonderful memories of my professional journey. Thanks.
Thank you, Bhavesh. Thank you so much. And thank you, everyone, for watching. And we'll also make an article out of it, and I'll make snippets of the questions asked, and I'll put it out on social media. So I'll share that with you as well.
Great.
Done.
Thank you.
Yes.
Have a good day. Cheers.
Thank you. You too.
Bye.
Bye.